What's up? I'm giving you the opportunity right now to tag along with me, set up your chart like a pro. I think regardless of the level you're at, you should be taking something like this. I'm such a visual guy, and doing something like this really gives you the best opportunity to kind of forecast what the market's going to do in the future, give yourself great trade ideas, be a lot more comfortable with trading. Please make sure to subscribe. This is going to be a little longer video than I usually do. So if you like the video right now, comment, maybe say you love me, whatever. It's going to give you a lot more, motivation to continue posting this stuff because I love giving you guys this insight. It makes me so fucking horny. It's the Red Bull, man. It's election day. Woo. I don't even know what to say. I've listened to a lot of A Boogie, and I've realized that I can read the markets, I think, better than anybody else in the world. Put ice back on my arm. I freaking blew my arm out playing pickleball yesterday. Me and my boy were playing two grandmas, bro. I was getting serious. I just, and dude, my arm just popped. Obviously, it's this arm. I don't want to do with that. I'm on the bench. I'm on IR for the rest of the week. I can still trade though. I said in my Discord today, I'm not trading. I don't think anybody should be trading. Also, just because I'm not really trading this week's mostly on education, I have a 30% off sale on my Discord right now. Live trading seminars, a full course that I have inside of there for 50 bucks. Learn how to trade independently. I don't know why you wouldn't. I look like a fat person. Today, this is all going to be about reading charts intraday, making sure that every time you see a candlestick print, you should be predicting what's going to happen next, how to read the bigger picture, how to help you take trades intraday, giving yourself the best opportunity to profit, seeing things, following news, staying away from certain outside factors. These are all things that are going to make you a better trader. The number one thing you need to be able to do is be able to read a chart. A lot of people before the day starts can, identify what's going to happen today, but actually struggle to a lot of people tend to set up a projection before the day actually starts, but when the candlesticks start printing, they don't really know what to do. Being able to pivot on the fly is exactly what's going to help you strive to be a better trader. That's what I'm going to show you how to do today. You guys can see I already have my zone set up on NQ. We're going to play on ES just because I don't have those set up. I can actually walk you through that. And this is something that's not actually going to apply to you too often because of just how short term you probably trade. But the first thing you want to do is start finding your zones on the weekly time frame. There's a big conception: the bigger the time frame, the more powerful the zone. Obviously on the weekly time frame, these are going to be giant, but the impact that these are going to have is going to be very high. How I draw my zones: you click this little paintbrush on TradingView and go to the rectangle, then you can actually draw these zones. Color doesn't matter. As you guys saw on NQ, I actually change the color of my zones depending on what it is. So, I mean, if I zoom in, you guys, it just helps me identify when I'm trading. I don't have to go back and look at what these mean. You can obviously put text over them, but I just like to put a color. You can just maybe make a little key on a note or something, or, you'll just, with time, you can understand that. My neighbors are having like a fucking drill competition, it sounds like. And if you guys are ever curious what time frame I'm on, you guys can see on that where it says ES1W. ES is what I'm charting right now, which is the S&P 500. That's going to be the time frame. So right now it's 1 week because I'm trading the weekly time frame. The big accomplishment you want to make with these zones is not only just to potentially trade off them, but just understand the key points in trend. For example, you look for something like this. You look for this wick right here. You can go ahead and mark these out. What is your accomplishment with charting out these zones? You are looking for key pivotal points to potentially enter a trade or just identify a potential reversal in price. Just for example, because this is a lot easier, we saw that this zone right here, this giant candlestick wick, that's the reason why I'm marking this out. The reason why I'm marking it is because we saw a huge influx of buyers after a big sell-off. Look at the move we had after it. So you're looking for a drop in this scenario, a big move, huge buying, pump up. That's what you're looking for. Because you're looking for validation of the uptrend, you are looking for confirmed buyers. There obviously is a lot in that area, so we're going to mark that out. I would never trade this because, again, this is on the weekly time frame and it's 210 points, which isn't horrible, but it's going to be very hard for you to catch that trade because of how big the zone is. This zone I would consider something, because I obviously do trade off these zones a lot. I would consider this one just an informational zone, something where I'm going to just watch, be aware of. When I'm in this zone, probably not going to trade, but I should be looking for another scoop of buyers coming in. And you guys can just copy me on ES right now if you'd like to. In a scenario where you can actually see right here, we decided to top out and sell off, which is good. But you guys can see this is also kind of within this zone. This kind of tops out right at the entrance of this zone. That's something where I wouldn't double mark. That's a good thing you want to see. You want to see these areas of price movement tend to kind of overlap each other because you're looking for a significant group of buyers or sellers in a certain area, and they tend to be in similar areas. That's a good thing you want to see. You want to see multiple moves off of a zone, regardless of the direction. So the fact that if I were to draw a zone right now, it would kind of overlap this one, I wouldn't mark it. This one right here really interests me because I'm going to mark out this zone and explain why I like it. We obviously had a huge pump up. Again, just how we did right here, the sell-off became. This is the initial sell-off. So this is where buyers actually started to take profit. Just think about this. This is the number one thing you need to understand. When you're looking for these zones, you're looking for exit points and entry points, but in this case, it would be an exit point. We had buyers come in at this low, sweep it up, and we had this huge pump. I don't like how I call it pump. This is almost 3 weeks of bullish trend. This is the area that people start to take profit. We are seeing mass sell-offs in this area right here, selling off, boom, buying at a new high, which confirms the trend, which I mean, in hindsight, you guys can see super bullish. It's such a crazy concept because you can really start to understand the bigger picture. If you're good at this, you can see we're obviously in a super big bullish trend. This is the first initial sell-off that gets bought at a new higher low. That was previously, you could say here or here, continues to be higher. So we have the initial low, higher low, higher low. So usually, which is crazy, and you'll see exactly why here, you will see us form that high, which, you know, I talked about marking this zone out. We can just do it for the sake of this, pretty small, but we would have this new higher low, which would actually usually trend to lead to a higher high. Kind of just think of this as like a kind of a staircase up. So we have the initial high, we make it, selling, finally find our new higher low, breaking it up to a new high, another higher high, coming down to a new higher low, continued by another higher high. It's just such a crazy concept. And what do you know? This is insane. It's so crazy to think about. Notice that this was our initial high, came down to here, bought up. This is our new low. Charted that out. Look what happens. We had more buyers coming in here. Huge breakout to the upside. New high. This is where people are starting to take profit. Comes back down, and what do you know? It stops and starts buying back up exactly at this new or the previous higher high. What do you know? Same exact thing happens. So look, I'm gonna do this one more time. Initial high, breakdown, new low, breaking that high to a new higher high, retracing back to the previous higher high to make a new higher low, to now break and make a new higher high. And I'm just saying, it's starting to look like we might be retracing back to this higher high to make a new higher low, to continue to break that to the upside. It's crazy. We'll go ahead and mark out this new high, and we're gonna leave this up to what it looks like now. So we don't have too many zones just yet, but you guys can see we clearly have the ideology of the trend forecasted. So now what am I projecting for the future? Again, we want to look for repetition in the market, and that's exactly what we've seen before. We had our higher high initially get made, coming down higher low, breaking the high to a new higher high, coming back down to the previous high to make a higher low, breaking out just like we did here to make a higher high, coming down to retrace to the previous higher high to make a new higher low, potentially to break this up to the upside again. We'll see who gets elected, to make a new higher high, retracing back to this previous higher high to make a higher low, continuing on and on until that trend breaks. We hold that projection. So right now, that is what I'm looking for ES to continue to do. One more time, if you don't understand higher highs and higher lows, let's just say price is chopping here. We break out, huge breakout to the upside, start to fizzle out, okay? At this point, you would mark this as a higher high, because this was, that's kind of a bad example. This was the previous high. Now it went higher. So now it is called a higher high. Meanwhile, this would be our previous higher low, because this was the previous low and now it is higher, but it is still a low, making this a higher high at the time. That's a horrible H. And then making this a higher low. Now that this is crossed off, this is now our higher high, because again, it is a high and it went higher than the previous one. Now price is stopping here and continuing to buy back up. Now this is our higher low because it is higher than our previous higher low. And now we're looking for a break of that, continue down. Again, now this is our new higher high because it is higher than that one. And then this would be our new higher low here. So hopefully you can understand that concept. I know it gets kind of higher high, higher high, higher high, lower low, lower high. Now that we have our weekly zone set up, let's go down to the daily time frame. Now the daily, this is where you're going to see more of a realistic approach. Now you're going to notice that this still looks really good. Our zones still look very solid on this time frame. All we're doing now is just zooming in slightly to just see if we can find more of an idea of potential price action in the future. Again, you want to look for these wicks. You want to look for important wicks or really quick flips. Right now, you can see the only thing that's really sticking me out, and this is in June, so we're still pretty far away from current price, but it's great to mark these out just to get an idea of what we're looking for. This is another good sell-off or a buyback right here. So we have a sell-off off this high. Then this is where we really found our low. We had a pretty big buyback, and you can see what we want to look for is a buyback in this scenario, and we want to see a move after it. You want to see a big move after that. We already have it marked out. So it kind of, you don't need to layer too much. That is though good for our future projection of how strong this zone is going to be, because again, we have another proof of buying in this area. I extend mine right, obviously, because I'm looking to trade these in the future, but extend them left as well. And you can actually look back at price within the zone. This one isn't really going to look the best because there's never been another time where price has been at this high. And honestly, there's nothing really sticking out to me too much for me to really go out of my way and chart, because on the weekly time frame we have such important zones. These are zones where you really want to take an opportunity to buy or sell. We kind of got majority of the area. You don't want to overcrowd your zones. Something like this candle right here on the daily time frame I really do like, because look at this. We have our initial sell-off, coming down multiple days of downtrend, followed by a pretty good buyback, another grain day, another buyback. But what you want to notice about this candle right here is the fact that price tried to sell back down to this low and got bought back and actually traded higher afterwards. And you guys can see the move that happened after that. And I would go ahead and mark this out from the beginning of this wick to the bottom of the low. I would definitely look for this area for a potential opportunity to take a trade. We're looking at about a 100-point zone, which isn't crazy. I could actually be taking a trade off of that. But that's what you want to really look for when you're trying to predict these zones. You want to find proof of buying. We have our initial low right here. Let me move my big ass head. We have our initial low right here, which we already marked out that zone. Buying back, let's just exclude all of this right now. So let's just look from here forward, from down here forward. We have our initial low being made, buying back up to this high. Didn't all the way reach it up here just yet, but you can see this was our new high right here, coming down, big sell-off to our new low. This would be our higher low, because you guys can see this was our previous low. It is now higher than the last. We would mark this as our higher low. Now look at this. Again, I'm going to break this down one more time. We have our huge downtrend by follow. What the fuck are my neighbors doing right now? Sounds like a dog is dying. Huge sell-off. Initial buyback right here. So we finally found our floor, followed by a slightly green day, which is good. Buyers held it up. Then we have our pump. But look at that wick. Understand what that candle looked like during this. So this was our open. This candle came all the way down to here, followed by a insta buyback to a new high. That is something you want to trade off of. That is an area where you want to put your money. You want to have the opportunity to give yourself the best chance to see a move. Why would I not take the shot at that? Why wouldn't I? The concept is breaking down your chart to find these areas, these zones where you have the best opportunity, bang for your buck, to take a trade and put your money in, have your SL set, and look for another target. Scenario just like this. There's no entry off this just yet, but you look and you take a trade potentially off this. You notice how strong buyers were in this area. Let's just say, for example, it came back down. You take an entry at the high of this zone. These zones are great because you have your SL already set. You would trade it until it breaks this low, because once it breaks that low, it would confirm to me that the higher low has been broken and we're looking to switch the trend. Until that point, I'm bullish. So now what we're seeing is price coming down back to this higher low, looking for another rejection, because again, I believe the market is one of repetition. If we just had this giant sweep at this low, there's a pretty good chance that we'll see similar buying pressure in that area, because everybody else sees that. So now what I would expect to see is, price kind of fizzle in here, reject just like it did right here, and we would target this high, because that's our next zone for another, 2.1 our trade, 200 points. This is a pretty big, trade, because, everything's relative. We're trading on the daily time frame, but that's the concept you want to trade off of. And that's what I've been doing the last 4 weeks, trying to find the best, supply and demand strategies, because I love this. I love being able to chart out, find the best place to put my money, give myself the best opportunity to take a good trade, find the value. I love finding the value, and there is value buying in this supply zone or demand zone. This is a good sign for buyers, not something I would mark out just because it's a lot of wicks. It's a good sign though if you are looking for buys. So we're currently rejecting off that right now. A boogie's so good, bro. You can look at the 4 hour, and that's exactly what we're gonna do right now. This is kind of that bridge. You can look for areas like this. You're going to get a little bit more of a zoomed in price while still having pretty big outcomes, a pretty big impact on your zones. Because again, a 4 hour zone, a daily zone, a weekly zone is going to be a lot more important than a 1 minute zone. So everything is relative. Please understand that. Looking at this right now, you don't see anything crazy, a lot of chop, which isn't the best, but we're just looking for, again, another impact area where we can really target to potentially look for a trade. The ability to look back on this is great because you can actually see the outcome we've been having. We currently are looking at the higher high that we have made on the weekly time frame, which is a very important zone. You can see a lot of selling came in this area. Doesn't mean that it's invalidated, but that's what we want to see. This is a very important area. There's nothing, no one's ever traded higher than this on ES ever. You can see the amount of profit taking that's happened in this high, which is good. This is something you want to see. You chart out a zone like this because you expect to see buying in this area, or selling in this case because we are currently trading underneath it. If you are trading underneath a zone, it is a supply zone. That means there is a lot of selling that you should expect to occur. If this was above this, this would be a demand zone. This would be a place where people would expect to buy, look for a continuation up. This is a great example of another good area to mark out. You see this is a pretty big, pretty clear cut example of something to chart out. You're seeing the rejection off the all-time high, price coming down. This is a pretty good example of something you should be marking out right here. You see we keep rejecting off this all-time high, price finally comes down, huge sell-off, we stop right here. Instant buyback. Now we didn't see the follow through, which we really wanted to see. You saw the move you wanted to see. You saw buying, and obviously this is a strong low. We had a nice wick right here. But the main reason why I really like this and it's giving me enough to mark out is because look, we have more selling in this area because just what I said, if price is trading above it, it is a demand zone. It is a place where you look for buying. If price is trading underneath it, which it was at this time, it turns into a supply zone. You should see selling off of it. So I like seeing a wick to both sides in such a short amount of time. That just shows me this is a good area to be putting your money. I know this isn't the best, example of, a super clean move, but you guys can see right as price came into this high previously, sold off, which is really good to see. We're actually approaching this right now. So this would be a potential good area to sell. And remember how I said earlier that we had this buying right above this previous high, but I didn't mark it out. Now looking at the 4 hour, it gets pretty hard to not mark out. You look at how much buying we have coming in at this high. This is something where you really could look to potentially take a trade off of. And it's okay if you have a stacked zone like this where you have two back-to-back. Problem is though, when you do that is you would obviously look to take longs off of this zone because you can see how much we've been buying off of it. You can take a trade where you have an 18-point SL, which is pretty small. You would just have to probably take the trade having the entire SL. So if that's something where you can still have a good RR trade, you see how we would actually be taking a trade off of if we did do this, which we should have marked out if we looked at the 4 hour. That's why it's so important to look at multiple time frames because it might not look the best on the daily or the weekly, but when you zoom in, you still looks really good for a setup. Look how many wicks are inside this buying. So we have like 20 right here coming back. We obviously saw a huge move off of it. Giant sell-off, by the way, huge sell-off, and it stops. What do you know? Right at this previous low. Of course it does, because the stock market is not random, man. There's levels to the stock market, and that's obviously one. So that's something you need to mark out. You are literally putting yourself at a disadvantage not marking that out. So if you can afford to actually have your SL at between both of these zones, which is what you would have to do because you do not want to be able to take this trade right here, SL right here underneath another demand zone, and you get stopped out and then it ends up coming down a little bit and then buying off of it. You would have to just trade both of these. And if you have another zone where you would target, which would be right here, and it's still good RR. See, I'm still getting positive RR on this trade right here, 1.27. I would take this trade 10 out of 10 times. Just happens to be election day and I'm not trading. It's not 100% identical, but looking at this previous low I made, if you bring it back, you see that again, we saw some moves above it, and that could just be liquidity, just strong liquidity. You can see we actually did have some selling in this area. This is a pretty key point, which is something you really want to see. And look back, another big buying wick off of this zone. I'm like, bro, come on. I'm not just saying shit. It's bad to have an approach where you are targeting a certain direction, like I'm about to say, but this is just kind of the ideology you should have. Remember, on the daily and the weekly, we are looking for that staircase continuation. We are looking for that low high being made, coming down to a higher low, breaking that high, making a new higher low at the higher high. We're looking for a continuation of this. So you kind of want to have that bullish outlook on the bigger time frames. So something when you go on the 4 hour, and you obviously could end up marking this, like, let's zoom in again. You could end up marking these highs, this high right here, this high right here. But I would really just wait for the high, this high, because you are really putting your money in the best spot here, not here and here. Just because the fact, like, yes, you could, and there's a potential that both these play out, but why wouldn't you just wait until you really know for sure? This is all-time highs, where there's only a 30-point difference in between there and here. Your odds are way better waiting for this to actually be coming into fact. Your odds are way better to just wait for this to come into play and then potentially miss this, because you are getting 100% confirmed buying, or in this case selling area. It's all about finding the best place to put your money. And yes, you could get in here, but why would I not just wait to get in at all-time highs if I'm looking to short this? Because again, you would want to target in between zones. I could take the initial trade here at this high. I could take where, let's see, I would have to have my SL at the top of the zone, because remember, your stop loss needs to be at a very key pivotal area. Putting that at all-time highs is exactly where it should be, because if we break all-time highs, we're probably going to see a continuation. And if we're in shorts and we break all-time highs, that's at that point the shorts are out the window. We're about to pump. We would be targeting this zone right here for a exit, and it would still be positive RR, but it's not the best RR ever. And let's say we move it up to this high right here. Again, 2.2 or 2.1 RR, still a pretty good trade, but why would I not just wait to have it at this high where we already had 3 bounces off of it? It's all-time highs. This is probably the most key point where now we have a 4, almost a 5 RR trade. At this point, looking at the hourly, we don't have anything too crazy to look at. Again, you're seeing these wicks, you're seeing bounces off these, which is important. We don't have anything just, important enough for us to take a trade off of, find the value that we really want to. I like to call these areas in between zones just kind of a dead zone. Not that it's a bad place to trade. This is an area where you kind of want to be in a trade, not take entries, just because it's kind of no man's land. This is an area where you expect price to chop, you expect price to move kind of freely. Then when you get to areas like this or here or there, these are the entry points. These are the actual areas where you can see and expect a reversal, a continuation, a breakthrough. And people can say, oh my gosh, Steph, you marked out this zone right here. And, this super important zone, you said that was the fucking greatest, and price broke through it. Well, understand this. This was actually on Thursday. This was an AI news that came out and it actually dumped the market. You guys can see this is not just, natural PA. But understand this. Look at this. This is the most important thing about this. These zones are not fucking foolproof. They're not going to always work out. They're not going to play out every single time. But in this scenario, remember how price is above this, we would be looking for, and I would be taking a trade off this for longs. And I think I may have taken this trade. But look, we have huge selling off. We don't have a green candle at all during this whole thing. And what do you know? We see 3 hours of buying inside this zone. This giant dump comes to a stop, ironically, right in our zone. So yes, it didn't play out, but we saw buying pressure. That's all you want to look for. If you take a trade inside one of these zones and you silly see some sort of buying in this scenario, the trade was worth taking. And you guys can see why out of all of a sudden, especially during AI, like a really bad AI news coming out, market dropping like a fucking fly, because we drew the right zone. We threw bias, we threw conviction, we threw everything out of the window. We drew a right zone. We waited for a price to come into it, and we saw a bounce and a move inside of it. So that's all that matters. You're telling me that it's just a coincidence that the only buying we saw this whole day after, 800 points of drop, was right in our 20-point zone? That's not a coincidence. And the fact that we had this huge sell-off, we had the breakthrough, and then we come up, and then we stop right in the zone. Like, this is just a coincidence? This gives you the best opportunity to read and forecast the market. Just going back and looking at this on the 4-hour, in my eyes right now, this gives me such an easy projection on the market going into the future. There's 2 outcomes right now. Setting up these zones is going to make it so much easier for you to predict the outcome and predict the future so that you can take good trades. There's only 2 scenarios right now what can happen. You guys have this previous high we were just talking about that we just are actually entering right now. This could either come back down, reject off of this high, and we could expect a potential buying opportunity for us in this zone to continue back up, break through. Price right now decides to break through, and then we're going to see some chop. We're going to see some pulling back up to this high, and then we'll have an opportunity for shorts. The best thing you can do is set up an opportunity for you to find the projection and then wait patiently for the correct entry. Take the entry. You already have your SL taken up. Remember, if we take a short entry, we have our SL at this high. We have our SL. Gosh, wow. SL here, boom. Target the next zone down, boom. Comes back down for longs. We have our SL set up, boom. We have our TP set up, boom. Both scenarios are set up and ready to go. Now we just wait. This is giving you the best opportunity to have the most success. I've been trading supply and demand for a long time now, and it's such a great thing to have. Even if you don't trade off of it, again, just having the ability to forecast in your brain what could potentially happen, it's a game changer. I really hope you enjoyed this. I hope you learned something. Please feel free to subscribe. Remember, 30% off of my Discord. You want to learn more about this, talk to me more, trade live with me every day. Go ahead and do that. So proud of you guys for trying to get better at all this. I know it's tough, but you're doing the right thing.